جت ظبطها جت ظبط. الصوت كيف الصوت كيف الصوت كويس.
Sure. بسم الله الرحمن الرحيم. الحمد لله والصلاة والسلام على نبيه وآله وصحبه أجمعين. السيدات والسادة الكرام, ladies and gentlemen, welcome back. نجدد ترحيبنا بكم ومع الجلسة الثالثة والأخيرة من جلسات هذا المؤتمر لهذا اليوم, علما بأننا سنستكمل مسيرة هذا المؤتمر غدا بإذنه تعالى صباحا في تمام الساعة 9:30. إذن نستكمل برنامجنا لهذا اليوم مع جلسة بعنوان ثورة التكنولوجيا المالية لتمويل المنشآت الصغيرة والمتوسطة. وتدير هذه الجلسة مشكورة السيدة غادة تيمة, وهي أخصائية القطاع المالي في مؤسسة التمويل الدولية. Ladies and gentlemen, please welcome the moderator غادة تيمة, lead financial sector specialist in the International Finance Corporation.
And the trick of speaking Arabic is that I know it's actually Ghada Taima, but that's okay. We've seen, I'm very proud to be with this panel. We've seen throughout the day how we've progressed. The first panel had 1 woman, the second panel had 2 women, and now we're in the third panel with 3 women. So talk about trajectory of the economic diversification in Saudi Arabia. We're doing pretty well, aren't we? We've heard this morning a lot about how important SMEs are for the economy in terms of job creation, in terms of diversification of the economic landscape, in terms of their contribution to GDP. And we've also heard throughout the morning on how it's challenging and how limited access to finance is to small and medium enterprises. Although there have been some important steps and progress made through the banking sector, we're also seeing, as you all know, a whole crop of emerging fintechs or technology-based companies that use data analytics, that use customer-centric approaches to provide very efficient and actually profitable solutions to small and medium enterprises. We have a panel here with us today that will share with us not only what they're doing, but also the trends that they're seeing in the fintech space, including some challenges, mostly opportunities, and regulatory and legislative aspects as well that will be important for the advancement of innovation and digital financial services, while maintaining, of course, the stability and other issues that are important to the central banks around the world. So, without much further ado, let me introduce the panel. We have on my left Paul Randall, Executive Director of Global Solutions, Credit Info; Anju Patwardhan, Managing Director, Credit Ease; Boule Goslar, Chief Customer Officer of Jumo; Mansour Davarian, Senior Director, Working Capital Solutions, Demica; and of course Najud Al-Malik, Managing Director, FinTech Saudi. We're going to start by each of the panelists introducing a little bit what they do in terms of solutions to the small and medium enterprise access to finance offering, and then I'll ask a question. Get your Slido ready so that when I open up the floor, we have as many questions from the audience as possible. And if not, I've prepared some backup questions as well. So Paul, why don't we start with you?
Good afternoon, everybody. I hope everyone enjoyed a lovely lunch. So thank you very much, and for the lunch and the services and the invitation. It's a pleasure to be here to share ideas with so many great experts. So Credit Info Group is an information and decision solution group. So perhaps historically you would have called us a credit bureau at heart of what we do. But I think perhaps our geographic location has more than anything driven the way that we've changed our thinking and the way that we work today. So historically we were European based, but in relatively small countries, in the Baltics, in Iceland. And then our expansion has been initially Eastern Europe, and then Africa and Caribbean. And what has driven a lot of the thought process is the fact this lack of data, So the traditional credit bureau data hasn't been available in many of those markets. So it's about finding other ways of trying to address this and find information and make decisions to support the process. So hopefully some of those, we'll talk about some of the detail of those during the discussion.
Thank you, Paul. Anju?
Hi, I'm very pleased to be here and just wanted to share a little bit about my background. I used to be in banking, worked with Citibank and with Standard Chartered Bank for several years, and I'm discovering several friends here in Riyadh who were my colleagues at Samba. So it's great to reconnect again, including Hamam Hashim and many others. I now work with Credities, which is a Chinese financial services company. In China, it's in the business of marketplace lending, wealth management, asset management, and insurance. And my role there is that we have a fintech fund of $1 billion, which invests in fintech companies all over the world. And I manage the US dollar fund. I've been living in San Francisco for the last 3 years. And I've also been a fellow at Stanford University, where I now collaborate with a professor and we teach a course on fintech. I also have a more recent association with Saudi that I'm very proud of. I recently joined the board of GIB KSA, and I'm very pleased to have this association. It's my first trip to Saudi Arabia and hopefully not the last. Thank you.
Thank you, Anju.
Great, thank you. Also a first-time visitor to Saudi Arabia and loving it so far, so thank you for the invitation. My name is Wushle Gosla and I work for a financial technology company called Jumo. It is an emerging markets technology company with the focus on Africa and Asia. We're operating across 6 different countries. I think that, to describe our business model, which is a multi-sided platform, partnering with banks and other digital operators such as mobile network operators, the likes of Uber and other on-demand technology businesses, what we're really about is helping people share value in this new oil called data, right? The way that we look at the world is that we're not just using data to score and make previously invisible individuals and micro and small businesses visible, so formalizing the market, but we're also using the data to fit products, right, to customers. So we do a lot with behavioral data to make sure that the right products end up in people's hands, and in fact that, it's not just a product in terms of getting a loan, but that it's a product that helps build financial capability and build an entrepreneur. My role at Jumo as Chief Customer Officer spans a number of different disciplines. So I look after customer intelligence, customer analytics, customer experience delivery and support, as well as customer acquisition and retention. So I think, my interest in SMEs and the financing of them goes far beyond my role at Jumo. I also serve as a lecturer at the Graduate School of Business in Cape Town, where I work with early stage technology companies, very early stage technology companies, and also social entrepreneurs to help them grow their businesses. And one of the areas that we also look at there is how they can use data to grow their businesses. So very excited to be here and really looking forward to the discussion.
Thank you very much, Wushle.
Perfect, thank you very much. My name is Mansour Devaran. I work at an organisation called Demica. I actually am heading the charge of Demica into the Middle East and Africa, the business. Alongside that, I am Chief Examiner at the London Institute of Banking and Finance for the Certificate of Supply Chain Finance. Essentially, Demica is one of the market-leading providers of working capital solutions to both banks and corporates. We provide white label solutions for banks to enable them to offer both receivables and payables financing, providing access to capital for both large corporates and SMEs through our solutions. We've seen rapid expansion of our business over the last 4 years, having increased assets from an initial $2 billion of assets deployed to now having $12.6 billion of assets deployed across Europe, the Middle East, and the United States. Our growth has truly been reflective of the size of the organisation, which is tenfold today what it was 4 years ago. Thank you.
Thank you, Mansour. Nujud.
Thank you. So I work with FinTech Saudi, which is the government arm, an initiative led by Central Bank to build the ecosystem or maybe work on the infrastructure from different angles. Well, one of the main angles is the regulatory support and the, of course, working with building capabilities, investors and banks and other regulatory entities to support the fintechs from an entrepreneurship perspective and actual market growth as well.
Great. So our panelists not only provide solutions, but also some of them focus on investing in fintechs themselves, which initially start as SMEs and then they grow, as we've seen, and become big companies all over the world. Paul, let me start with you, and maybe you can tell us a little bit about the trends that we're seeing in using data analytics, and the innovation that's happening in the credit information industry as a whole, and what you're doing in that space as well.
Sure. So I think we're seeing considerable change in the credit information space as the availability of data differs and the type of information. I think we've also already, we initially seen quite a change actually, even from the 1990s US type version. In the new credit bureaus, I think we mentioned this morning, the information from businesses is now available, which was never the case historically in the UK, US. So the new wave of credit bureaus that have been facilitated and supported by the World Bank particularly have already had a step ahead in terms of having business information as one of the core fundamentals. The way I think I would generalize in terms of the change in vision is very much as really information centers and really being able to bring together different information sources and be able to then provide scores and understanding and interpretations of that data, both for credit and broader understanding of businesses and individuals. So one of the I suppose first sets of data, if we're thinking about the different what are the makeup of those different data sources, is really expanding the role of government and the support of government, particularly where they have data. And as governments become more digitalized and a number of governments are going through that process, the credit bureaus, credit information is seen as a facilitator of that information to make it available to the financial sector and support the better understanding of SMEs. So we know that historically why loans and credit wasn't granted to SMEs was lack of information. So where the government has this information, it's now digitalized. So probably one of the biggest examples of that is a major transition that we're working on in Oman at the moment, where they have identified 25 different data sources within the digitalization process and really driving that to a single process through the credit bureau that they're setting up, and to be able to give a greater understanding of SMEs with the combination of information. And that's a project that we're supporting on. If we look at other markets and how the government relationship has gone, we've seen utilities information much more widely available. And often that's one of the major payments that's being made by small businesses. And so again, that can give that history of payments and utilize that information. And so we're seeing there that on the basis of that, it's a strong predictor for the repayment of future credit for those people, for that first credit, that formal credit that those businesses will have. So that's and then looking away from, I guess, more less structured data, then we're seeing the integration of open banking, whether that be the open banking that we're seeing now in Europe, and the people like Experian and Equifax are major players in that process and providing solutions in tandem with their credit data, or whether we're looking at the M&O type data, the mobile wallet information, which is available in many of the emerging markets, where we can see the transaction history of the SMEs, and being able to use that to understand the cash flow and the growth of the business over time. And that's one of the areas that we're very much involved in Kenya, is be able to fuse the information from the credit bureau and the information from the mobile wallet to support business lending. And then perhaps the other area related to business is more about the speed and the process of bringing that information available. So we're moving away from a monthly batch process in terms of the histories, trying to dynamically understand what the current status is, what's the current outstanding, by receiving data on either a change basis or even on a demand basis. So in Iceland at the moment, when a request comes in, it's not looking at a database, it's going to all the banking entities and bringing that information as it is at that point in time. So again, that move from, let's say, I guess, a more batch process to something that's very much more online and digitalised in the point of time that the decision is made. And then in really how we're incorporating this information. So bringing these multiple data sources, often some of the data sources that are very much big data sources. So there we bringing in some of the concepts discussed this morning of machine learning, AI. A lot of the time, I think I hadn't seen Mark brought a really smart way of phrasing it in terms of the combination of the machine and the individual. And I think a lot of the time we're seeing that combination at the moment because the regulated institutions really need a little bit of time to understand. So we're using the machine learning AI part to actually understand some of the key trends and then bringing that perhaps into a classic credit score, which is much more acceptable from a regulatory point of view. So it's very much merging the two aspects. Yeah.
No. Sorry, did I interrupt you?
No,
okay, great, thanks. And it goes back to what Bushlin said earlier about data is the new oil. So even within the context that you described, whether it's traditional financial data, whether it's utilities data, whether it's unstructured data, payments data is very important. But even now, every time an SME goes online, whether it puts an order, receives an order, what websites we visit online, whether individuals or SMEs, all that data is used to determine behavioral aspects and which goes into the credit decisioning.
Very much so. So that's and sometimes so that's whether that's exactly whether it's formal or at the point of decision, scraping the information, bringing it together, fusing it with the credit bureau information. And then there may be also additional information that we're generating, psychometric scoring, so to really understand some of the behaviours of the owners, bring those different sources and be able to channel them at the point of decision.
Great. So Bushley, maybe moving back to you, and how are you using that as well in terms of the innovation and profitability products that or solutions that you're offering to small and medium enterprises?
So maybe one other thing that I'd like to add to what Paul said in terms of the trend of the small and medium-sized businesses being more digital and, okay, is that better? Okay, being more digital and visible, right? Is that an exciting opportunity that we're seeing is the way in which small businesses are now organized when you see them digitally, right? So if they're participating, for instance, in the ride-sharing economy or some kind of payments operator system, it means that we can actually now segment them. And for us, that's something that's incredibly important in terms of building products that can actually fit those customers. So quite recently, when we built the asset financing product, which we call Drive, one of the things that we had to look at was what are some of the key issues that people face in the ride-sharing economy. So we had to deal with unpredictability and variability of income, right? So we had to design the product to take care of that. We had to ensure that there was sufficient insurance and that type of thing. So I think for me, that is an opportunity which I'm excited about, because I think when you really look at the needs of small businesses and also micro businesses graduating into small business, what you realize is that financing is definitely something that they need, but if you truly want to help them to grow, you have to take care of all of the other issues that they're facing. And so for me, when I start to see an increase in more holistic solutions, and ours is not the only one in Kenya. I know that Unilever's been doing some work with MasterCard and merchants around exactly the same issues. I think that is where we are most likely to see more growth, right? If we're actually looking at what are the end-to-end issues. Because I think the risk in only looking at data as a source of information for scoring is that sometimes you only see, you have a blind spot, right? It goes back to, you actually need to have both what is actually going on in the real world for a customer to show up in this way, digitally. And what you find is that perhaps you're giving terms which just don't work because of the type of industry and segment that a customer is in. So then you say, that's a bad risk customer. But no, you put the wrong kind of product into their hands. So I think for me, a trend that's exciting is this move towards looking at data not just as a way to score a customer in the first instance, but also as a way to create new market segments. I'll give one more example where this is concerned, right? When we first started out, we've served over 12 million lending customers, and we have 120 million, operating on our platform. Our assumption was that because we essentially lending blind and using data, we will include more women, right? And we were really shocked about, 2.5, 3 years ago, when we found that only 1/5 of our customers were women. So we went back and we said, well, what's going on? And what we found was that there was a problem with the algorithm, right? Because there was an over-reliance, ultimately, on mobile money transactional data. Now, if you think about it, in an emerging market context, who earns the least money? Who's transacting the least? Who's the least likely to own a mobile device? Even if they own a mobile device, who's the least likely to have active and advanced usage of mobile money? Women, right? So then we had to go back and start saying, hang on, of course the machine is amazing. Of course machine learning and AI are amazing. But there are some inherent biases here that we need to correct for. So what clues can we get in the real world that can help us to look at this differently? Can we perhaps have a different channel strategy, right? Where we actually are more going to the places where women are already most likely to be, and to have their data digitized and use those as a channel and a source of acquisition. So for me then, that's what I mean about the convergence of these two things, where what you're finding is that the micro and small businesses are not only coming online, but they're coming online in communities. And you're then able to actually identify the segment. And secondly, that the data that is being generated is going beyond payment data, right? It's their geolocation, it's a whole bunch of other things, which then actually allow you to be able to move from purely scoring to actually using fit, right? And that's what we're trying to do on our platform. The reason banks choose us is because we're not just going to give them some kind of trust score, but we're going to fit the customer with the product. It's almost a segment of one, right? And that's happening on a basic feature phone in less than 2 minutes. And I think for me, that convergence and those opportunities are what are going to move us forward, because it's not just reaching existing small business owners, but it's actually also market creating. It's helping those micro business owners take the steps that they need with confidence, right, to become small and medium business owners. And that's quite exciting to me.
Right, great. And that actually is why a lot see the whole digital financial services and fintech as one, if not the solution to reach the unreached or the unbanked, the underserved and the unserved. And beyond the data, of course, being customer focused, customer centric, making sure that we're providing the right solutions based on need is very important. And absolutely correcting for inherent biases and making sure that we're looking at these models. And AI is fantastic, but we can't, it can't be a black box. We need to be very careful about not only what goes in, but also what it's producing for us. So checking that as well. Maybe going to a specific sector, and Mansour, I think for you, Demica works a lot in the supply chain industry. Well, actually, and SMEs are quite a backbone in this, because a lot of the large corporates have either distributors or suppliers as, so can you tell us a little bit about the solutions that you offer?
Yeah, of course.
And how it's innovative
Of
for
course.
SMEs?
I mean, I think firstly, it's very important that there has been a growth in SME lending in Saudi Arabia, and I think that's fundamental to society as a whole. If we look across the region, there has been contraction within SME lending over the last 5 years, and that is very much driven by multiple factors, including risk factors around SMEs, consolidation of the banks, which has resulted in overexposure to particular names, and the way in which receivables financing and other types of transactions along that line are subject to fraud and other types of manipulation. So one of the key solutions that we've seen grow heavily in the region is payables financing. Now, payables financing enables you to effectively lend to a small SME on the back of the credit risk associated to a large buyer or a large corporate buyer. These solutions have, as a result of what we see as contraction in the market, these solutions have rolled out quite considerably across both the UAE, Bahrain and Saudi, which is enabling the SMEs to get access to capital through traditional banks who are deploying these solutions. So one of the key aspects of our solution is to work alongside banks, enabling them to get access to our platform through a white label look and feel, while deploying to their own client base and providing access to the SMEs for financing. And that we see as a key driver in terms of growth within the regional economy. And we're seeing this not only having had rolled out across Europe and the US over the last 10 to 15 years, but the growth we're seeing within the Middle East has been substantial as the focus has been on addressing the lack of capital deployment to the SME market.
Great. So shifting a little bit to the investments in fintech themselves before we go back to the other discussions. Anju, you've invested in around 60 fintechs around globally. Can you tell us a little bit about how you look at those? How do you evaluate them differently from other SMEs in other sectors?
Sure. So when we first started looking at SMEs, I was initially looking at it from my own. Is that better? Yeah. So I was looking at them from my own banking experience, where I had previously been in the chief risk officer role, and it was really hard to do underwriting for the SMEs. In fact, my former bank could not even decide where SME banking belonged. So for some years it would be in corporate banking, then it would move to retail, and then it would be standalone, and then it would again go back to corporate, and it was like the child that nobody wanted. And the reason was that from a risk-return perspective, it didn't make sense. The capital requirements were high, the underwriting costs were high, and the profits were low, right? It's like the Goldilocks of digital banking. It's not complicated or profitable enough like corporate accounts, but it's too complex to be part of retail banking. So when I started looking at fintech companies, I realized that they were solving this problem that the banks had not been able to solve for. So 4 or 5 years ago, when you looked at companies in this space, the first area that they focused on was obviously lending and using machine learning, digital distribution, and alternate data sources to be able to do lending. And some of our earliest investments were in the lending space, like in companies like Funding Circle in UK and a couple of others. Now we are seeing very different trends within the SME landscape. And I think it's important to remember that the needs of SMEs are not just in lending. They need many, many things. And it's only in the last 2 years that I've started seeing solutions come up to meet other needs. There is a whole area around helping them manage payables and receivables, helping them manage expenses, having business credit cards that can be given to their employees with preset limits, with merchant locked cards, which add up to your overall budget. And it didn't exist earlier, but in the last 1 year, I've seen companies come up in China and US, and we've invested in both places, which are solving for this problem. There are larger companies which are helping corporates manage their payables and receivables, like Demica, and then we've invested in a couple of your competitors in the US. And then there is a whole requirement around, people forget that there is a requirement around financial education for the SMEs. We've invested in a company in the US which focuses, its primary focus is to educate the SMEs on how to manage your cash flows so that you can improve your credit performance and therefore get access to credit at cheaper rates. So they look at your cash flows and they tell you how to improve your profile. But in the interim, they also try to match you to different lenders so that you don't have to go apply to a large bank and a small bank and a fintech lender and waste your time and energy. So they look at your profile and they say, you're most likely to get accepted from these 3 companies, and then they send the leads to those companies. So it's a whole process around efficiency and productivity for the SMEs so that they can focus on doing the business and not waste time trying to get access to credit. And that's been the whole thought process around the regulation that UK passed, where they said that if a bank rejects an SME application, then they must pass it on with all the required data to a portal, and then on the portal, other banks and fintechs can bid for that application, and the SME doesn't have to go around submitting it to 5 or 6 different lenders. The last area where we're seeing a lot of innovation now is around the insurance needs of SMEs. Right? Again, everybody knows that the enterprises need insurance. You need insurance for the premises. You need workers' liability insurance. Workers' compensation insurance. Sometimes you need directors' insurance. You need insurance for your equipment. But everything is a different provider, and then you end up taking 4 or 5 or 6 different insurance policies from different companies. And again, it's inefficient in terms of time and cost. So there are new fintech companies that have started coming up which have started providing insurance bundles. So for example, if you are a photography professional, they have a bundle of all the different types of insurance that you may need. Or if you're in construction, or if you are if you're a plumber, right? They have a bundle which meets all your insurance needs. So there are many different kind of solutions which are coming up. And what I would urge everybody in this room to think of is that it's not just the lending which the SMEs need, right? I mean, you may not have the appetite to take credit risk, but you can certainly do many other things as well using technology to make the whole process easier for the entrepreneurs.
Great, and that's a great reminder because I think Mudahi from Riyadh Bank mentioned this morning that it's not only about the credit aspect that SMEs require equity, they require financing, but there's a large financial services, including insurance and transactional products as well. So that's a great point. And maybe moving from the global aspect to Nujud, and in the Saudi context, what are the achievements so far that you've seen and some of the challenges in the market that you've encountered with Saudi fintech?
Yeah. Sure. So let's take this conversation. It's a great conversation. We'll take it a step back. A fintech is an SME on their own, a startup on their own, and they need to have a roadmap as an entrepreneurs to establish their own business. And that depends on of course, the enablement of the structure from regulatory point of view, framework point of view, from banking and services that are being extended to them as a business provider. And then look at the fintech, what kind of service they're providing as well. They're providing lending to another SMEs themselves. So it's always a coin that as you can look at it from different angles. So from a fintech Saudi's perspective, we take the SME angle and start build on it, because we need to have the regulators looking at these fintechs as responsible fintechs at the end of the day, and accept their services, accept their technologies, accept their credit scoring, and accept their due diligence and data gathering methods for these services to be extended. And then look at them how we want to invest in them as an SMEs on their own, and how they can support the growth of the financial sector as well. They're not banks, yet they're not there to compete, they're actually filling a gap. And that's the history of the fintechs, especially in the lending or raising equity. So we, in Fintech Saudi specifically, we studied the ecosystem from building capabilities, from the investors' point of view as well, and what makes an investor invest in a fintech company to start with. And then we looked at where are the gaps from the infrastructure perspective, from government coverage as well, how the governments are looking at these entrepreneurs themselves and how they're going to make sure that they protect their customers, they protect their consumers, the money they're having and investing is a good money. So from that, there have been a lot of activities took place. So we have right now the regulators actually looking at the fintech as a segment to license. So they are a fintech lab and a sandbox to test certain activities to issue regulations. So this is one of the milestones we achieved around building the ecosystem for fintechs in multiple industries as well, because there's a lending platform for health sector that really requires different measurements and risk-taking to be done rather than in, for example, housing or education. So each fintech can be specific in a service and can service another fintechs or consumer or business, business providers. So we really take case by case and definitely work with the banks as well to support the cases of fintechs that they need them as a platform, regulators to be aware of what they're doing, to include them, because we want to include them in a very healthy economic system. So this is where we are with the fintech industry today overall in Saudi. That's from an ecosystem perspective, I would say.
Great. And because you mentioned regulation, before I open up to the audience for questions, get your phones ready, please. Maybe our panelists can share with us a little bit from their experience in the markets that they've operated in. What are some of the regulatory issues that you're facing? What is needed to be in place to make sure that innovation is flourishing, but at the same time, the cybersecurity, the data protection, SME and individual rights are protected as well from a regulator standpoint? Please.
Shall I kick off? I think for me, one of the challenges that we've seen is particularly when trying to support from a cross-border and a global perspective, is there are still a lot of country-specific controls of data, and sometimes that's understandable. But I think also there perhaps some level of understanding of what should be kept secure and what is reasonably to be able to move from country to country. For instance, if you have data that doesn't have any individual personal identification, is that still data that is country specific or can be taken to somewhere else for analysis and investigation? I think this is one of the questions which will limit some of the fintechs as international fintechs want to take their solutions cross-border.
If I could add to that, that is definitely one of the things that we are concerned about. We are using cloud infrastructure, and it's a huge part of our ability to maintain the type of unit economics that make it possible, right, to reach the broad base of the micro and small entrepreneurs, right? But I think in general, I'm very excited to see that regulators are getting more involved in this conversation and trying to make sense of it. And it's interesting because when I look at it, I see quite varied responses, right? So, you have, some countries like Kenya and Tanzania, for instance, where for the most part, the stance has been to continue to have kind of your bank regulation, your ICT regulation, allow fintech to go for a while. And it has done that. There have been some good things, there have been some bad things, and only now, we're starting to see, okay, let's look at this, how do we regulate the activities? On the other hand, you have some other countries like Zambia and Ghana, which have gone the route of, we'll regulate you as non-bank institutions, so we'll just put you in this category and try and expand our view of the world as you go, so bring it to us, which has been great in some instances because at least you know where to go and what to do, but approval processes can be a bit slow, which can be frustrating. We also see completely different approaches, say like in India, for instance, which is a lot more clear and prescriptive. It's data localization, but at the same time, it's coming with something which I think is really positive, which is huge investment in public infrastructure, right? So whether that's Aadhaar and India Stack, or more recently, there's been a lot of conversation around potentially a public credit registry. What it does mean, though, is that it lowers the cost of entry, right? And it allows a lot more players. And, the introduction of things like the sandboxes is also something that is really exciting to us because it means that we have an opportunity to try out in a really safe environment and protecting the end user, as you point out, to innovate and create new solutions. So seeing the big challenge, though, that I'll point out with all of these different types of approaches is, as Paul says, when you're a global player, it means that we have to be keeping up with all of this and then thinking about what does that mean for our infrastructure investment, because we have to be able to respond to all of this. So that's definitely a challenge when we look at it at a more global level.
Yeah, and if you don't mind, I'd like to add my view to that as well. So some of the big issues we've seen in Saudi Arabia, specifically around the new cybersecurity regulation that came into play late December, early January within the kingdom. Now, that regulation encouraged or discouraged the use of cloud platforms and the data migration onshore. So the biggest challenge that we have, and a number of other players in the cloud space have, is that we process data very efficiently through cloud-based platforms, enabling us to mitigate the cost of deploying a solution for our client base locally. So by the change in regulation and the change in, or the challenging regulations in different markets, and this isn't just Saudi Arabia, this is the UAE, this is Egypt, this is across the region, the challenge in localization within each country means that we effectively have to deploy our solution in multiple instances across multiple countries, rather than enabling the benefit of having one cloud-based solution that enables access to all, even if data is segregated and restricted on a per-client basis. So these types of regulations, the ever-changing regulations that are around cloud, does have a significant impact to not only us, but other cloud providers who are looking at providing access to capital for SMEs.
My experience has been that since the global financial crisis, a lot of regulators and governments have tried to do many things to encourage financing to SMEs by the banks. UK set up the British Business Bank, US had the Jobs Act, India started different types of licenses, many countries are doing challenger bank licenses, but in general, they have not worked. If you look at SME lending across markets on an aggregate basis from the banking sector, it's been broadly on a decline. And when I was in banking, the biggest reason for us at that time was the Basel III regulations, right? Under Basel III, the RWA requirements for lending to SMEs went up significantly. A lot of the times, these companies tend to give commercial real estate as collateral, and again, the capital requirements on CRE changed under Basel III. So basically, from a risk-return perspective or return on capital perspective, it just didn't make sense for the banks to do this on a large scale. I'm not sure if those regulations have changed in the last 2 years for the better or not, but if they haven't, then I think that's one big deterrent why banks are not, despite all the incentives and encouragement and support. I mean, there's Kafalah program here, which is a great initiative. Many countries are doing, Singapore offers guarantees for the SME lending, but it still doesn't have the desired effect in the magnitude that it should be.
Just to add to that, I mean, fintechs have a very complex nature of doing business, and for banks is to host them as a client as well. We pose a capital risk, as you said, on a Basel level, especially for big banks. And then you look at the data sharing. A lot of countries right now, like India, are posing new regulations. I'm not sure if it's approved or yet, in terms of localizing their data and not be shared. So between this and that, we always face this kind of globalization, as they say it, rather than globalization, because people need to control of their data, and then they look at big banks, how they're going to play a role in terms of supporting and hosting these fintechs, irrespective of what they're doing. At the end of the day, add to that, if a fintech is extending a lending platform or a credit platform or crowdfunding platform, so there is another layer of risk that all governments are worried about. And again, we look at how data is stored and processed. It's just very difficult for regulators to determine which is the best formula. at this point. And we've seen, like in the UK, they've changed their regulations and the GDPR, BDST2, and many changes happening around even the payments landscape or the data sharing landscape. And they keep evolving and changing their risk assessments to accommodate fintechs. And that's what's happening as well in Saudi. We're just putting those fintechs in the sandbox just to test them and make sure that when we go and open up for international players as well, the platform and the legal and institutional system can definitely accommodate these changes. Because at the end of the day, a fintech, if it's a foreign investor, then there is a foreign money coming into the kingdom. And if anything, God forbids, happen, we need to have the infrastructure to support the exit or any kind of strategy for fintechs.
Great. Paul, you wanted to say something before
Yeah,
we...
I think I would just add to some of the comments in terms of, I think that, the positive thing is that, all the regulators are interested in dialogue. So I think there is, at least that's a main, I would say, a big change from, let's say, historically where things were pushed down. I think there's very much a stronger dialogue than in nearly all countries. We've been quite engaged quite a lot recently with in Morocco, and there's a very strong engagement.
Great. So I think that's actually a good segue to one of the questions that we have up here. And I'm going to ask the panelists maybe to pick one or two to comment on so that we don't have everybody answering the same question. So let's start with the sandboxes, and are they the most effective approach for innovation in your view for fintechs, or are there other approaches to adopt and promote innovation? Who wants to take that one?
Well, I have one comment. Sandbox is a testing environment, and in Saudi Arabia, the sandbox basically means that you're testing in the real market, and we're just we're adding just some certain caps and certain limits, but really you're testing into the real market. So this is, I think, it's not going to kill the innovation. It's going to just test what we're doing right now and make sure that we protect the economy as much as we go. But it's not a sandbox that is in a free zone, which are governed by certain regulations, and then when they go out, there's no sustainability. Actually, the fact that you are in a sandbox means that, well, you're very well considered to be in the market.
Great. Did anybody else want to comment on sandbox? So there's another question. How can we prevent failure of fintechs? And how to create harmonized standards for data governance.
Would you mind if I address
Maybe somebody can talk about the, I guess, data governance, and the last question here on consent and other individual rights in GDPR are quite related. So maybe we can have Paul. How's the GDPR ultimately affecting?
So I think we had great fears about it, and I think it's been a good process for us. We've had to look internally and understand exactly what our data flows are, where our data is coming from, and I think probably like most organisations, we made some assumptions and we discovered some things about the business. So yes, it's been in some ways it felt like a big burden during the process, but I think now we feel that we've got a much cleaner and a more correct business, that we are fully respectful of everybody's individual data, and it's very much top of mind.
Just to add on to the GDPR, I think it's a good measurement of how the data should be used. But again, we all, I think, fall into the same first point: who owns the data and how you can actually implement ownership on an individual basis. I think all regulations are looking into how they implement the ownership structure for individuals on their information, rather than let's control what's out there and how we use it.
I'll also add to that, a lot of the guidelines around data privacy and in Europe and US and in other markets, actually they apply to individuals. They apply to what is classified as PII, the personally identifiable information. And technically, if you are lending to a small business or a medium enterprise, which is a partnership or a limited liability company, then these things don't apply. Even the localization of data, where they say that data cannot be sent overseas or cross-border restrictions, generally don't apply to corporate data. If it's a sole proprietorship, then it's different, because then it's an individual's information. So sometimes we have to be very clear on what kind of data it is and whether those guidelines are applicable or not. I also want to talk about the question on fair. Sure.
Could I interrupt? Because I actually feel that is actually a major point. As you were talking, I got to think about it. Was actually with SMEs, you know, the directors and the owner are intrinsically involved in the business. So I think what it has brought up is, where does the business end and the individual start? Because I remember when we used to look at business in the UK, we would automatically look at all the court judgments on all the directors, and so, which was an important aspect of that assessment. And there were certain understanding that in small businesses, the directors were, if you didn't look at them individually, but you looked at what was the total number of court judgments for those individuals associated, that was seen as business information. Now it seems, it's much harder. So then the process becomes more burdensome. You have to go and get permission from every director, every major shareholder, to make that assessment, to make it true. So it actually is slowing the process, particularly for SMEs.
Maybe there's a role for the IFC or the World Bank here to help get clarity on these.
Yeah. Just to add again in respect to the privacy and customer information. So the way we have sought to address this is to split transactional data from actual customer information. So one of the key aspects of our solution is the requirement, or within payables financing, is the requirement to onboard suppliers. And as you onboard suppliers, you collect KYC information. So one of the biggest concerns a number of our client base had globally is where that KYC information was held and stored. So for us, we built a whole new solution surrounding this within our platform that enabled them to offload the KYC information and have that stored on their own infrastructure rather than necessarily be on our cloud platform. Now, the separation enabled us to have transactional data running on the platform and KYC data held locally within the individual banks or funders. Similarly, where there were concerns around transactional data, we started to receive encrypted data, so data that we were unable to identify and corresponds to particular customer bases, enabling the whole solution to effectively be invisible to us while operating it in the cloud.
Great. And Andrew, there's a question for you, which I think is a million-dollar question, right, regarding supervision. And of course, banks are supervised by central banks or monetary authorities, and fintechs most of the time are not. So what are your thoughts, and specifically to Ms. Andrew, what are your thoughts on the supervisory overlap regarding fintech?
It's a very interesting question, and I think different countries, different jurisdictions deal with it differently. It is not correct to say that fintechs are not regulated. They're just regulated differently. For example, even in the US, the companies which are doing lending do have a license. It's just not a banking license. They cannot take retail deposits like the banks can. Many of them are raising money from institutional investors or their marketplace lenders, and they have a different kind of license. In fact, it's a state-by-state regulation. UK has challenger bank licenses. Even in the SME space, UK has like Tide Bank, which is a bank. Monzo is a bank. They have banking licenses. India has different types of banking licenses. Singapore is introducing the same thing. The concept is that if you are not taking retail customer deposits, and therefore, the risk in terms of consumer protection or financial stability is low, then the capital requirements should be low, and therefore it should be a different type of license, which makes perfect sense. Having said that, sometimes there is regulatory arbitrage, and I find that a lot of the arbitrage comes not in the licenses, but in the way you do assessment. To your point earlier on using machine learning or artificial intelligence, now using it for fraud risk, banks also do it. But using it for your credit risk models is a whole different cup of tea, because if you're a bank and you have your risk models, they need to be approved internally, then by your auditors, and then by your regulators, and most of the times, all these people don't have the knowledge to be able to assess the machine learning models and approve, and therefore they just sit somewhere in the pipeline for 2, 3, 4 years and nothing happens. And then you meet the fintechs who are implementing new models every 3 weeks or every 3 months because they don't have that onerous process. So that's where I feel there is a disconnect, and perhaps harmonizing the approval processes would be much more helpful. I don't think it's so much on the licenses. Yeah.
Did anybody else? Okay. So I think I want to go to the Kafalah question. What are your thoughts on fintech and banks collaborating and the partnerships that are emerging? And how can a program or a scheme like the guarantee scheme help with that or support these partnerships, if at all? It's an interesting question.
It's
I can answer this one half of it, which is on the partnerships that we are seeing between banks and fintechs, and that's mostly in terms of technology platform. For example, JP Morgan did a partnership with OnDeck in the US, or Funding Circle has done a partnership with, I forget whether it's Santander or BBVA, where the banks are going to be using their technology to automate the workflow, to automate the underwriting process, and for distribution. So we're starting to see, Cabbage has done a partnership with another bank, I forget the name. So we're starting to see a lot of those kind of partnerships where the banks are saying, you guys have built a good workflow system, you know how to do underwriting better than us, or use alternate data sources better than us, and therefore let's partner and leverage on that.
Yeah, just interesting about the Kafalah and bank collaboration. I think if Kafalah is looking at fintechs from a lending perspective as a responsible fintech, then I think it could be included in one of those programs eventually, because it's a source of giving facilities. So why not? For today, we just want to see more fintechs actually operating in the Middle East with different facilities rather than just the banking facilities in the market.
Yeah, and I don't see any issue with the engagement of the Kafalah program into some of the work that we're doing. Fundamentally, it is very much around lending to SMEs, and any support that we can receive for that process is very much appreciated.
I think to the question regarding the supervision or the, I guess, oversight, what we're seeing around the world is really a whole wide range of variation. I mean, there was the question about GDPR and how the Europeans are, passing these data protection laws that are applied across the EU, and then you see on the other side of the spectrum the US and how deregulated it is, and how they want it to stay that way. And then you see other countries like China, for example, where there's a little bit of a mix of regulation and non-regulation, and still some experimentation. And Mexico, they're one of the countries that, few countries actually, that have passed a fintech law. So there are some examples out there in the world about, regulating fintechs. Okay, so we talk again about, I think that's also a question that we might want to touch upon, the fintechs are not competing with banks, that they are filling a gap that the banks are not able to fill. So at the same time, competition is needed for any market to thrive. So, I'm not sure how are they, I'm not sure. The question is, we talk about how fintech isn't competing in Saudi Arabia and that it's merely closing a gap. Isn't competition needed for future in this field? Yes. However,
I think collaboration is very, very important.
Exactly, partnerships.
Partnerships and collaboration is fundamental to the fintech ecosystem. In certain jurisdictions, for example, we do work with non-banks who fund directly on our platform, our customer base. In certain jurisdictions, you can't have that. The regulatory capital deployment has to be from regulated entities in that market, meaning that in that environment, you can't have additional competition from fintechs unless it is in the sandbox environment or in a pre-approved environment.
Yeah, I think one of the issues is around definition of fintech. One of the issues is around how we define fintechs, right? Because if we kind of look at fintechs as a homogeneous mass, that's also not really true. I think that there are certain fintechs who, for instance, are doing the end-to-end supply of financing themselves and perhaps even lending off balance sheet. And to that extent, you could say, yes, those are competing with the banks. But other financial technology companies are really infrastructure players and are enablers to banks, right? Other people are, more providing tools for the SMEs and not necessarily, the actual lending activity. So I think what one wants is actually to make sure that across all of those different streams, there is development and innovation, and sometimes it can just be competition on activity, right? And not so much competition across the, not trying to be a bank, but really just trying to say, well, what is the best way for distribution or scoring, etc. And all of those things can help banks also improve their muscles in those areas if they see new practices which seem to be more efficient.
Right. And I think it's part of the whole evolution of the industry, right? And it also always reminds me of this example of the Netflix founders when they went to Blockbuster corporate to pitch the idea to them of joining them in Netflix, and the Blockbuster people laughed at them. And where's Blockbuster now? So to the bankers in the room, partnerships, innovation, I think it's something that it's inevitable and it's happening anyway. So get on the train if you're not already on it. Ms. Najoud, maybe last question. I think you did mention, you did talk actually about the achievements in Saudi Arabia, but maybe elaborate a little bit about how this compares to best practice or international practice.
Sure. So again, Saudi has its own, again, there's no a fixed work frame around the world. Every region has its own way of managing financial technology companies. And we've seen it, when we talk about China a bit, we've seen that 13% of the SME peer-to-peer lending was for China, and China was closed and still closed as society and environment and regulations, and they managed to capture the biggest, large amount of peer-to-peer lending. So for Saudi, comparing to international practice, depends on how we're going to take that metrics, whether it's a fintech from an entrepreneurship perspective or fintech as a financial service provider. So from a financial service provider, I would say that the government already has opened the floor for certain activities. We've seen the e-wallets are being regulated. We've seen the crowdfunding on equity from the Capital Market Authority is being regulated. And the second wave of sandbox opening for different services from insurtech perspective and lending platforms already being reviewed, and Fintech Saudi is part of the sandbox seat as well to look and challenge. The good thing is that regulators are actually looking into this new players as an actual recognized players in the emerging market, and they're forming regulations and frameworks, and they will evolve. Regulators and regulations will evolve accordingly with the market and the market needs, of course.
Great. So I think we have 5 minutes. So in the spirit of digitalization, rather than me wrapping up, maybe each of the panelists in tweet form, so you have 140 characters, for one key takeaway for the audience that we will consider as the conclusion of our panel today. Paul, why don't we start with you? I'm putting you on the spot.
Okay. So I think the key takeaway is really looking for information, gathering information, and bringing that together and being able to assess it to drive forward understanding of SMEs to be able to better manage and work with them.
Very good. Anju?
I would say remembering that what we are solving for is not just the financing needs of SMEs, but also all the other needs around financial education and literacy, payment solutions, insurance needs, accounting needs, etc.
Great.
I would say a continued focus on looking at technology and when looking at technology and data, on ensuring that, yes, we are protecting the SME, but that we're also empowering them in the way that we design products, in the way that we design regulation, and in the way that we design interactions between the different players in the value network.
For me, access to capital within the SME space is imperative within economies, and for us, utilising SME relationships with their counterparties, their buyers and so forth, to provide them with access to that capital is a great opportunity to support credit and risk procedures and lending.
I can have 2 tweets, actually. So I would love just to, kind of inform that the current situation in Saudi is opening up to fintechs, and part of that is the collaboration we have seen between the Capital Market Authority and the central bank in terms of establishing a fintech Saudi center, a hub basically to support accelerating certain needed fintechs in the market and link them with the strategy to achieve the numbers. Fintechs are well recognized as emerging players in the market.
Great, thank you very much. And with that, our session is over. Please join me in thanking our panelists for a great discussion. Thank you very much.
Thank you indeed. I'd like to invite Mr. Humam to the stage to award and thank our panelists and moderator. إذا نذكركم أيها السيدات والسادة الكرام بأن اليوم الثاني من أيام هذا المؤتمر سيبدأ بإذن الله تعالى في تمام الساعة 9:30. Please be reminded that we are starting tomorrow at 9:30. ندعوكم جميعا للانضمام إلينا اليوم على وجبة العشاء بتشريف معالي الدكتور ماجد بن عبد الله القصبي وزير التجارة والاستثمار هنا في هذه القاعة. We'd like to invite you to dinner which will be served here in this hall. And our guest of honor will be His Excellency Minister of Trade and Investment, Dr. Majid ibn Abdullah al-Qasabi. So dinner will be served at 8:30. شكرا جزيلا لكم. نراكم غدا. We'll see you tomorrow at 8:30 as well for our second day in this conference. شكرا لكم والسلام عليكم ورحمة الله وبركاته.